I want to introduce a friend of mine, a friend who we met on the internet because we're both presenters and we're watching each other's presentations and enjoying each other's presentations. And I have stole more material from Brad than Brad has stole from me. I think Brad is very well aware of that. And even though Brad is a Colorado Avalanche hockey team fan, I have invited him here today to talk about the technical issues that we are having with S corporations and partnerships and reporting for S corporations and partnerships. And let me also mention that Brad and his wife came to Clearwater Beach, and Brad came to my office and we met with each other for about an hour, and it made a difference for me to get to know Brad, and it also gave me a lot of enthusiasm and a lot of confidence for the exercise program that I am on and for enjoying what I do for a professional. So these types of friendships, I think, are very important. Brad, anything you want to say about relationships or the Colorado Avalanche and the probability of them losing to the Tampa Bay Lightning before we go into the matter at hand relating to S Corp and partnership K forms?
Well, Alan, thank you for such a generous introduction. And then you went off the train track there when you talked about the Avalanche losing to the Lightning. But I see that you have hockey sticks behind you, and all I have is a Hampton Inn room in Rogers, Arkansas. So you beat me there, but I just want you to know that what happens on the ice is what counts. And also, you just gave a terrific program that I thoroughly enjoyed. Thank you for that, on relationships. And you know, when I met you in Clearwater, was a pleasure. And so I spent that vacation working on the outline I'm about to teach, and I'm in big trouble with my wife. And I wonder if you have any relationship advice for me on that.
Just do exactly what she tells you to do for the rest of the day. Apologize often and buy her a gift. One of those things might work.
Gee, thanks. That's great advice. But it seems to still be on the table. I mean, in other words, it doesn't just last a day, but at some point it'll clear up, I hope. Well, thank you, Alan. So today we're going to talk about schedules K2 and K3 and how for 2021 partnership and S Corp income tax returns, they blow those forms out of the water. Let me explain. And by the way, this is a bit of introduction to the topic today, in that we have about 30 minutes plus some QA. I'm going to give a more deep cut on this topic for Lineberg Information Services in a webinar. It'll be a 2-hour program coming up on June 24 at 2 o'clock Eastern time. Today we're going to get as far as we can and open up the awareness of the issue. Now, what today is not is a fishing expedition into international tax. And what this course is for our next half hour or so together is a focused look at the K2, K3 for about 99% of us. And by that I mean a United States partnership with United States partners. And so today I focus upon domestic, meaning United States, partnerships and S corps with wholly United States operations, income, assets, and owners. Now there's a whole nother side to the K2, because this K2 thing is all about reporting items of international significance. But today we're going to take a quick look here at the scheduled K2 and K3 for wholly domestic U.S. partnerships or S corps. Now, what does that mean? It means no direct owner is a foreign entity or individual. There's no foreign financial activity. There's no foreign taxes paid or accrued. And there's no ownership of assets that generate foreign source income. There's no foreign taxes paid. Also, there's no United States or foreign C Corp partners. And then no indirect partner is a foreign partner. Now, what's that mean? Well, of course, a partnership can have a partnership as a partner. And if that partnership that's a partner is a foreign partner, then it's not wholly domestic. Anyway, if any of your owners are foreign, then it's a whole nother bucket of worms. And of course, the K2, K3 then is also required. Anyway,
So Brad, let me interrupt you because we have a lot of laymen who tuned in for my first hour, and they're wondering whether this is something that they should watch. So, an S corporation is a company that makes a special election under the Internal Revenue Code so that its income and deductions pass through to the shareholders. The company normally doesn't pay any tax. The shareholders pay the tax, and they get a K-1 form, which tells them what their share of the income and deductions of the company were. When you have an entity taxed as a partnership, then it works in a very similar way, and that K-1 form applies. You could have a limited liability company, which could be taxed as a partnership, could be taxed as an S corp, or could be taxed as disregarded. So Brad, I know what a K-1 is, and I think most people on this talk know what a K-1 is. Let's just go to the very, very basics so that my grandmother could understand this. What is a K-2? What is a K-3?
Okay, that's terrific. Thank you. And you did ask me to talk about that. Let's do this. So for starters, as Alan says, we're talking about today a United States company, and we're talking about one that's structured as either a partnership or an LLC, taxed as a partnership. And we're also talking about an S corporation, which is a type of S corporation whose income and deductions, just like sort of with a partnership, pass through to the owner. So it's a liability that typically may give limited liability, as you mentioned in your prior program, to the owner. And there is an entity, and there are entity level activities. And at the same time, for tax purposes, the income and the deductions flow through to the owner. Now, the owner, whether it's an S Corp shareholder or a partner in a partnership, that owner will receive something called a K-1, which is a statement of that particular owner's share of income and or assets, deductions and so forth, that are that partner's or shareholder's share of things. Okay, looks like a polling question's popped up here. Alan, did we intend for this polling question to pop up? Apparently that we did. Very well, but hey. Okay, so while the polling question's going on, a K-1 says, here's your share of income and deductions. And that's all that we've typically had. So now the IRS came along for the 2021 year for the very first time and said to us, oh, by the way, you also have to report international items. And that's what this new K2, K3 thing is all about, as my next couple of slides will show. Hey, Alan, does that work? Yeah, I can't hear you if you're talking. Okay, cannot hear you, so here we go. So all of that said, what we're worried about today is the United States company, the United States owner, and United States operations. That doesn't get tangled up with anything as far as foreign activity goes. That's it. That's what I mean by wholly domestic. So typically, your partnership and your S corp actually do report a K-1 share of income or deductions to the owner. We're used to that. We've had that for decades. But then IRS comes along with this newfangled K-2 and K-3, and they say these forms have a special purpose of reporting items of international significance. Now, at first, all of us thought that, I'll give you an example. Let's say a little flower shop in Laramie, Wyoming. My older boy attended college at the University of Wyoming. And Laramie is this little town in the wind-blown Wyoming plains in the mountain region. Well, there's a little flower shop, and it only sells to U.S. customers. It has no international income activity. It has no international foreign taxes paid or anything like that. And so the little flower shop says, why do I care about the K-2 and K-3? Because I don't have anything international. And so the IRS says, well, you do have to care unless you jump through hoops to prove that you meet an exception for filing. Well, why would the little flower shop in Laramie, Wyoming have to care? Because maybe one of its owners had some broker that got him into some foreign investment, paid some foreign tax, and now that owner, outside the scope of the partnership or S corp operations, has to figure the foreign tax credit on their income tax return to prevent being double taxed by both the United States and that foreign country. So now our U.S. domestic partnership has to do what? Or our S corp has to report certain information to help the partner or shareholder make sure that they do not get double taxed. And put it this way, there's a lot of complexity to this. Anyway, so today we talk about the solely domestic, the little flower shop, or maybe the little car repair shop that sits in Winter Park, Florida, that has no international owners or business or something like that. Or maybe the, who knows, accounting firm in Blackwell, Oklahoma, or something like that. And so the little flower shop in Laramie, Wyoming says, why do I care about international? I don't have international. But Horace would tell us, for it is your business when the wall next door catches fire. Because IRS says you have to care. So let's all gather around the campfire for a story. Once upon a time, prior to the 2021 tax reporting year, in other words, the 2022 tax season we're in now reports 2021 activity. Prior to the 2021 year, partnership and S corp income tax returns were in orbit as we knew them without schedules K2 and K3. And then in July of 2021, IRS introduced schedules K2 and K3. But they said, hey, if you're purely domestic, solely United States, no foreign activity of any variety, no foreign owners, then you don't have to care. And so the tax community widely read the above to mean that the partnership, if it didn't have international activities or owners, that it need not worry about the K2, K3. We said, that's nice, they have a new form, I don't care. But the fact is, what did we not see in those original instructions? Because what IRS did, they came along in January of 2022 and they go, everybody has to care unless you prove that you don't have to care. Well, wait a second, IRS, that's not really what we all read the first time back in July when you announced the new form. And IRS says, yeah, if you have a partner or shareholder who outside of the scope of this pass-through entity paid some foreign taxes, then the information generated by this partnership or S corp will come into play when computing whether or not a foreign tax credit is available and how much is available to the owner, even though this partnership didn't do any foreign tax activity. Well, in response, Alan, to the IRS's broadened scope of the K-2, K-3 filing obligation, we, the tax community, came up with a fix. And we said, if we go talk to every owner and verify whether or not they need the information from the K-2, K-3 to prepare the foreign tax credit form, and if we find out from everyone that they don't need the information, it looks like we don't have to file it. And so then the IRS, after the tax world went ballistic, came out and said, oh, yeah, we realized that we pulled a fast one on you when we changed the rules at the last minute. Tell you what, we'll give you an escape hatch. Now, I came up with what I call Fix A, which is an escape hatch for filing the K-2 and K-3 for the year 2021. And then IRS came out with what I call Fix B. If you look it up on the IRS website, you won't find Fix A or B. It's just my nickname for it. But here's the catch. If you don't qualify for either Fix A or Fix B, then you must file the K-2 and K-3 for 2021. So what IRS did, at first they said, don't worry about it. Then they go, oh wait, tax season starting. Now you do have to worry about it. We all thought, what? We didn't see this coming. So IRS artificially created a crisis, and then they seized the moment to ride their pony through town to save us all from it. They're like, we'll save you from the crisis we just artificially created, and they gave us Fix B. Now here's the big question. So if you have a partnership or S corp, the question is, why does IRS say that we need a K-2 or K-3? And IRS says, well, you know, in the past, for the year 2020 and prior, you had to prepare the Schedules K and K1, which reported to the partners their share of income and deductions. And if there was anything international activity-wise, it had to report it in a supplementary statement to the K1 in a hodgepodge white paper, willy-nilly supplemental disclosure. The K-2, K-3 replace those old white paper, willy-nilly hodgepodge disclosures and give them a standardized format. Okay, fair enough. We could see that as a step forward for humanity. However, it's just the way that you introduced it to us, IRS. You didn't tell us we had to care until January when tax season already started. The tax software companies weren't ready for it. In fact, IRS wasn't even ready for it because you can't e-file a K-2, K-3 until later dates. And so it's just a big Chinese fire drill, or whatever you want to call it, a big runaround to actually get this thing set up and running on time. And so the IRS came out and said, look, we're going to give you actually a break for the year 2021 where you don't have to file these if you meet the transition relief. Now look at number 5 here. It also, these K-2, K-3s help IRS to select someone for exam. Now I have what I call Fix A and Fix B. If you meet either one of these, then you actually meet an escape hatch for being off the hook to file the K-2 and K-3 for the 2021 year. Now, Fix A, it comes from FAQ 14. If you want to find that, you can go on Google and type in IRS K-2, K-3 FAQ, frequently asked questions, and you'll find all the FAQs. Then Fix B, which IRS came along with later after the tax world went ballistic. And of course, they said, oh, here's another fix. If you meet Fix B, as I call it, a 4-prong test, then you're also off the hook for the transitional year. So let's first talk about partnerships and partners. And to further answer Alan's question, usually a partnership will file Schedule K with its income tax return, Form 1065. And it's the summary of all the items that are going to be allocated among the partners. So here we have Schedule K-2, which is brand new for the 2021 year, which is a glorified extension of Schedule K, and it reports only items of international significance. In fact, it's only 19 pages long, if you can believe it. And then there's Schedule K-3, which is a glorified extension of Schedule K-1, reporting items of international significance, and it's only 20 pages long. So as you can see, there's 39 new pages that IRS dropped on the tax world like a nuclear bomb in January of 2022, and they said, yep, unless you can prove you meet an escape hatch, you must file these. Now here's an interesting thing. If anybody's listening to this call as a tax preparer, you know that you enter items into the tax software, and then the tax software crunches it up and spits out the form, and off we go. Well, so there's an odd thing going on here. If the partnership or S corp itself actually pays some foreign tax, the software is saying, we want you to enter it twice. Well, you know, that's counterintuitive to actually enter something twice. I mean, you get this creepy feeling like, if I enter it twice, it's going to count it twice. Well, no, you actually enter it once and then a second time, and each has a separate purpose. The first time you enter it is so that you can report the fact that the entity paid a foreign tax or accrued it, and that reduces the basis of the owner in, for example, their partnership interest. The second time you enter it, it's information that's provided on the K2 and K3 so that the actual partner knows how much foreign tax credit they can take. So this K2, K3 is really a horse of a different color. It's different than really what we've ever seen before from a reporting perspective, given the way they want us to go about it. Okay, fair enough. So, as Alan asked at the beginning, what are the basics of partnerships and S corps? Well, let's take a little bit more and take a look at this. So, with a partnership, you can have any type of owner, no restriction. With an S corp, you cannot have certain types of owners. So, for example, with an S corp, no foreign owners. With an S corp, no corporate owners. And so, since fewer owners can play the game with S corps, well, fewer owners can get involved with international activities in complicated ways. So the K2s and K3s for S corps are simpler, but for partnerships, by comparison, they're wide open, complicated. Now, if anybody's listening here and they're a business owner or a layperson, well, put it this way. For your partnership or S corp return, you need somebody preparing that understands it. And if you're a tax professional listening to this, I don't have to tell you that the old days, well, we can kiss them goodbye. You know, Alan, it's a little bit like the old days, and I can't trash talk because I know that'll backfire on me. Trash talking doesn't pay. We all know this. But in the old days, the Tampa Bay Lightning won 2 Stanley Cup championships in a row, and now they're going for their 3rd. But now they have a new opponent, the Colorado Avalanche. And the question is, are the old days over? I guess we'll have to see how it plays out. But the fact is, it was okay in the past to have a preparer that didn't understand the basics of international tax. Well, now, if you file the partnership or S corp income tax return, there has to be some basic understanding of international tax. And if not, well, it'd be like a dive off the diving board that belly flops, and That's painful. In other words, we've got to have some understanding of the international tax rules anymore to push out to the IRS and to the owners tax reports that make sense. You see, 2021 is the only year for transition. After that, in 2022, we absolutely must push out the K2, K3s. So the old days of the flower shop in Wyoming saying, I don't care about international, well, going, gone, as they say in baseball. And so here we go. Why do we care? The flower shop in Wyoming says, why do I care whether I file K2, K3, or not? What are they going to do? Put me in the stocks and whip me? Well, there's 5 consequences, really, if you're supposed to file it and you don't. So these new forms, remember, IRS says you must file them unless you prove you meet an exception. Well, if you don't prove you meet an exception, you have to file it. And if the return is late, incorrect, or incomplete, then there's a nasty penalty because they accuse you of not filing the partnership or S Corp return. And that's $210 per owner per month, not to exceed 12 months. And class, that's about $2,500 a pop per owner. If it goes a year, that's expensive. And then the K3, it's an information report. There's separate penalties for not giving that to the IRS and also for not giving it to the owner. It may cause trouble because a partner may later come to you or shareholder and ask for the information, at which point now the preparer has to go dig it up. It's not that efficient. Also, it may cause the owner to have to file a special form on their income tax return form 8082, a so-called notice of inconsistent position, if they don't get the K3 when they're supposed to. And besides that, IRS could accuse us of never having filed the partnership or S Corp return at all because it was incomplete. And since it was incomplete, IRS loves to argue that it was never filed. And then IRS forever gets to come back and open it up for IRS exam. So here's the first penalty that can happen, $210 per owner per month up to 12 months. And then there's the information reporting for not giving the K3 to the IRS. And then this is the next slide. There's the payee statement for not giving the K3 to the owner of the S Corp or partnership. And this just gets expensive. In fact, let me ask you a rhetorical question. Does anybody know who originally wrote and sang the song Susie Q? Now, I know that Creedence Clearwater Revival covered it, but that's after the original guy sang it for the first time. Anybody tell me, Alan, do you know who sang this thing for the first time? Who wrote it and launched it?
I don't know. Sorry, don't know.
Well, let's see if the audience can come up with it. But the fact is, it's an original Southern blues guitar, rockabilly type song. And it says, Susie Q, I love you, I love the things you do, and so forth. Well, anyway, Susie Q LLC is a 3-partner, wholly owned U.S. LLC in the Bayou of Louisiana. And it has 3 partners. But it doesn't keep up with the treating out on the houseboat. It doesn't have internet, so it doesn't know about the K2, K3, and files the return without the K2, K3. Okay, did anybody get it? Well, the original guy that sang Susie Q, his name is Dale Hawkins. And if you want to listen to a real nice original tune, just YouTube Dale Hawkins Susie Q. It's really a treat. And the guitar is badass. It's really good. All right, so that said, Susie Q doesn't file the K2, K3. And now look at the monetary penalties. This goes on for a year. And what's the price tag? $10,920. Whoa.
Wow, that's a lot.
So how can we get relief in the Red Cross relief tent? That's the question. Well, this ladybug right here is saying, oh, the leaf is wet, and oh, I have to go uphill, and all this moisture is on my back, and it's hard work, and I've got to grind it out. That's true. But what the IRS says is, hey, ladybug, you got to keep grinding because you will not get the penalty relief unless you make a good faith effort. And by that we mean change your systems, processes, procedures. Alan in his prior program talked about processes and procedures and how they have to be in balance with everything else. Well, because of this new K-2, K-3 thing, they say if you don't change your practice checklists and so forth to gather the information from the partners to see if they need the international information, then you'll get the penalty. In other words, ladybug, you got to grind it out. We're not going to cut you a break if you don't try. So the little flower shop in Laramie, Wyoming, well, guess what? The wall next door has caught fire. And you do have to, if you're going to take an escape hatch for preparing the K2 and K3, and I know you don't have international activity, I understand that, but you still have to push the form out unless you prove that you went through the work, the due diligence, to prove you don't need it. In fact, Alan, check this out here at number 2. They want the partnership to modify the partnership or S-corp agreement, partnership or S-corp, or governing instrument to facilitate making the owners share the information with the pass-through entity to tell it whether or not they need the information, which then determines whether or not the entity has to push out the form with its income tax return. Now, the IRS says the effort made, reasonableness of assumptions, and size of the partner that the information was not obtained from play into whether the ladybug tried hard enough to climb uphill. In other words, did you do enough work to be reasonable by not supplying the information to the partners? So you have to do something. The ladybug cannot just pull over and take a nap. So let me ask you this. What are the reasons to file the K2, K3, even if not required? Now, I have a little bit to go, and I think I'm going to make the call to just finish it here, and then I'm going to be very happy to look at the questions and address as many as we can. So, seeing the harsh consequence of not filing these new forms, even though we're on our early going of our learning curve on them, why might you want to nonetheless file them this year? Well, first, if any partner comes along after we file our income tax return and says, I need the information, then you'll have to supply it, which won't be the most efficient thing in the world. It also removes the need for the partners to file a so-called 8082 notice of inconsistent position. And so if the partner does not get a K3 when they need one, they have to make up a story about what the K3 should have said and report that made up story on the income tax return, and they have to do that with a form 8082. This prevents the need to do that. Also, if you prepare it this year, even though maybe you have an escape hatch, you can jump on the train early, because a year from now, the K2, K3 is required of all of us anyway. So it may be that you can file your pass-through entity income tax return without the K2, K3. However, IRS says that if some partner or shareholder comes along and asks for it later, you do have to provide it for them. And as Joseph Fort Newton would tell us in the 19th century, a duty dodged is like a debt unpaid. It's only deferred. And we must come back and settle the account at last. Now, here's the 8082. So if you don't get a K3 or a K1, you're supposed to file this and tell a story about what you didn't get that you needed to get and now what you're reporting. Or if you get a K1 or K3 that you disagree with, you also attach this and say, they told the wrong story, I'm telling you the right one. Anyway, this gets attached to the owner's tax return. And so that's how that works. And so now I want to share with you quickly, what is the transition relief? Because this would get you off the hook. So drum roll, please. All right, this is the transition relief. There's two ways that you're off the hook for filing the K-2, K-3 this year. One of them is to meet all four requirements of Fix B. No foreign owners, no foreign financial activity. Last year, you did not provide any foreign information to anybody, nor did they ask for it. And this year, nobody is requesting it. Fair enough. Now, if you meet that, you need a checklist to indicate that you met it. So I'm going to give you an example. My older boy, Miles, who's 36, who owns a bicycle shop on Lookout Mountain, Colorado, that overlooks Denver. It's just where the mountains start there, just above Golden, Colorado. And he has a bike shop. He only sells United States customers. He only sells United States manufactured bikes. There's nothing foreign. He's not a foreign person. I should know. I signed his birth certificate. And I'm a U.S. citizen, as far as I know. His mother is. And all of that said, he's a U.S. guy. There's no foreign activity. There's no assets that generate foreign income. He didn't ask. You see, I'm his dad. I do his tax return for free and his books for free. Of course I do. And so he didn't ask me last year, nor did I report anything foreign. And he hasn't asked for it this year. He's too busy repairing and selling mountain bikes. Okay, that's great. What's the result? There's no K-2, K-3 required for 2021, but we have to document the file. So I have to go to my son. I say, will you initial this checklist that says all this is true? And he says, Dad, I'm working. I said, I can see that, and I appreciate it. You're a good boy. But please, can you just initial this? And then I've done my due diligence, because the Ladybug has to put out some effort to prove that I don't have to file the K-2, K-3 for 2021. He goes, okay, Dad, and he signs it. Okay. However, we only dodged the bullet for 2021 because the K-2, K-3 are required for 2022. Now that was Fix B. It comes from FAQ 15. It's not that tough. You can read it in the FAQ and you'll see what I'm talking about. Then there's Fix A, and this is where you meet any one of these four prongs. This one's a little more challenging. That's fine. I'm just showing you technically. Really, between Fix A and B, you have 5 escape hatches that are possible for filing the form this year. Okay, that's great. You can read all about it to your heart's delight. Now, let me ask you a question. Who must file K-2 and K-3? Well, that's anybody who doesn't meet an escape hatch. For example, the entity is formed under the laws of a foreign country, or it's got a foreign owner, or it's got foreign financial activity or foreign tax paid. Or last year you reported foreign tax information or somebody asked for it, and this year somebody asked for it. Well, now you're on the hook to file. Now, what if you're not clear about whether you should file? Well, I'm going to quote Teddy Roosevelt. In the moment of decision, the best thing you can do is the right thing. The next best is the wrong thing, and the worst is not to do anything. If you're not sure, well, I got an old saying in my practice, and that is, if in doubt, fill it out. If in doubt, send it out. So now you might be saying, wait a second, I filed my 1065 partnership income tax return or my 1120S without the K-2, K-3, and I don't think I met an escape hatch. What do I do now? Well, you go back and file an amended return or a superseding return, or you can sit tight and argue the insanity defense. And I'm not really sure how that's going to work because it's not on the list of the relief in the Red Cross relief tent. So all of that said, go back, file the return again, attach the form. Now, I've got one more major thing here to talk about. And Alan, perhaps you've heard the old saying, look what the cat drug in. You know, we're sitting around and we're having a happy day, and all of a sudden, here comes the cat. that's drug in something from the backyard, and we're like, ooh, that was best not drug in the house. Well, you see, we're paying all this attention to the K2 and K3, but something else has surfaced now that we're paying attention to international activity. Now, there's an excellent article here by a gentleman, John Samtoy, CPA, out of the Los Angeles area. And it's a good read. This is a live link right here. Click, click. But here's what he says about verifying partners. You, as a United States partnership, and this is not for S corps, it's just partnerships, must go to every owner and find out in writing whether they're foreign or United States. You must verify their status as foreign or US. If they're foreign, every US partnership has to go to every foreign partner and get a W-8 or W-8 equivalent. Why? Because on foreign partners in US partnerships, there's a withholding obligation of 30%. But if you file the proper W-8 or equivalent, it may go to lower than 30 by reason of a tax treaty, or maybe no withholdings required. Without the W-8, it's full bore withholding, and if the partnership doesn't do it, they're liable to the IRS for it after the fact and might not be able to recover it from the partner. And the other deal is W-9. Now, you and I know W-9s. For example, if Allen's Law Office hires an independent contractor to fix the roof or something, I don't know, they might get a W-9 from them to get the declaration, I'm not subject to back withholding, here's my name, ID number, so you can send me a 1099 and such. That's great. We know the W-9 as that. But class, there's another purpose for the W-9 that most people are not aware of. A U.S. partnership must get a W-9 from every U.S. partner. Now, where do I get this from? From the W-9 instructions. What you see here in the blue, green, and red is a cut and paste from the W-9 instructions. Here we go. If it's a U.S. partnership conducting a U.S. trade or business, or a foreign partnership conducting a U.S. trade or business, it must withhold tax under Internal Revenue Code 1446 on any foreign partner. But if a W-9 has not been received from every partner, the tax law presumes that the partner is a foreign person. Thus, a U.S. person that's a partner must provide a W-9 to avoid withholding. Now, this is not required for S corps, but it is required for, of course, U.S. partners of U.S. partnerships. So let me ask you, how many of you that do U.S. partnership returns have gotten a W-9 from U.S. partners? Because you see, if you don't, there's 31% withholding on ordinary income, either pass-through income or distributions, and there's 20% on capital gains. So let's just take this example. Let's say that my son's bicycle shop in Colorado, home of the Colorado Avalanche. Let's say that my son's bicycle shop is a partnership, and he's working on a mountain bike, and I'm doing his taxes, and I walk up to him and I said, hey, Miles, I need one more form from you. I need you to sign this and date it. And he goes, what is it, Dad? I said, well, son, it's a W-9 and you need to sign it. And he says, what's it for? And I said, well, it's to prove that you're a U.S. person. Now, my son's busy. He's trying to fix a bicycle because the customer's on the way to pick it up. And he looks at me and he says, Dad, he says, it's a form to prove I'm a U.S. person? Yes, Miles. And he says, Dad, that's stupid. I said, hey, Miles, you know what? You're right. It is stupid. But you know, I read the instructions of W-9 and it says, even though you're my son and you have a U.S. birth certificate and the whole business, if you don't sign this form, then I have to send 31% to IRS and you can't afford that. I said, I do your books, for free, as you know, and that you don't have the cash flow for that. So you're better off just taking a moment from the bike there and sign the form. And he goes, okay, Dad. And he does. You and I need checklists, indeed, to show the Ladybug tried, to get the information from everybody, to see if we have to push out the K2, K3. But also, we need checklists to verify that we have documented whether every partner is foreign or domestic for withholding purposes. And I got one last thing that we're going to call it, okay? What if, when you're looking at the international stuff for the year 2021, and you're going, oh my gosh, I have to push out the K2, K3, or I have to prove that I don't have to. But what if when you compare 2021 to the past, that you go, oops, we were supposed to be reporting things in the past that we did not report. Now, what do the ethics rules tell the practitioner to do at that point? It may lead to the need for or consideration of amended returns. Circular 230, section 10.21 requires the practitioner to advise the client that amended returns should be filed and the consequences of not doing so. The U.S. Supreme Court tells us in the Badaracco case that no one has to file an amended return. There's no legal obligation. It's just that you might want to avoid the consequences of not doing so. So I cooked up this list of things right here. And the question is, what if we were supposed to be filing these in the past? This relates to foreign financial activity and ownership and so on. What if we were supposed to be filing these in the past and did not do so, for crying out loud? It's the obligation of the practitioner to go to the client and say, gee, we should file these. Now, there may be late penalties, and we're going to have to weigh this out. Filing late reports can, but will at the same time trigger the statute of limitations beginning to run. And if we don't file them, well, the liability item is open for a really long time, known as forever. So if something comes up in the mud puddle because we're paying more attention to international this year, we can't just bury it in the mud. Anyway, there are some programs for coming clean on compliance, some retroactive amnesty programs. But don't try this at home without supervision. It requires the expertise of an international tax attorney that's good at this stuff. And by the way, that's not me. I don't practice getting people out of international tax trouble on a daily basis. I know some guys that do. Well, we're so glad you joined us today. And there's, of course, a much deeper cut, because isn't everything really deep cut and complicated? So I'm going to do a deeper cut on this for Limeberg Information Services. If you care to click into that program, you can register there. It's Friday, June 24th at 2 o'clock Eastern for a couple of hours. And for now, that's it. And I'm so glad you joined us today, and I hope that you got value for your time, and I hope that you enjoyed it. Okay, now, Alan, I can go click on the questions panel here, and if it's something that we would like to do, then I can answer.
Yeah, that's fine, Brad. Go ahead and click on the questions. I'm going to sign off. I'm going to let you finish with the group. For those of you who are CPAs, just know that you're going to get 1 hour of credit for today. Just because my hour was approved. Brad's hour is just an add-on. There's no credit. Brad, you've done a great job. I have really enjoyed it. It's time for me to get home to Marcia. So Brittany's going to make sure that the system works, and I'm going to sign off now. But I can't thank you enough. Very, very interesting program.
Thanks. Thanks for having me, and have a great day.
Yeah, you too. Take care, and goodbye, everybody.
Okay, so I see some questions have come in here, and I'm extremely happy to answer them. So here's one. from James. How is a partnership with a number of partners expected to know the international relationships of entities that are 2, 3, 4, or more indirect relationships from the reporting of a partnership at S Corp? In other words, how do you know about your partners? Well, the new law expects you to ask, James. And welcome to the IRS instructions to the K-2, K-3. They expect you to ask about whether your partners are of foreign ilk. So if you don't, there's big trouble, basically. Okay, let's see. Here's a question by Jesse. If control of Congress changes, will the new Congress get rid of K2, K3? And Jesse observes, I think K2 is a mountain almost as tall as Mount Everest. Gosh, that remains to be seen, Jesse. Okay. Let's see. Here's a question by Megna, and that is, what is the way to prove that K2, K3 does not apply? I think we went through that in the class. My guess is you asked that before I covered it. In fact, I look at the time there. But you actually, I'll just answer it. You look at the IRS FAQs and you find them by Googling IRS K2, K3 frequently asked question FAQ. Google that, you'll find them. You have to find an escape hatch in either FAQ 14 or 15, which in your slide deck made available to you today, I call those Fix A and Fix B. Now here we have Tomer, Jesse, and Rob that all said Dale Hawkins was the original singer of the song Susie Q. A couple of people guessed Buddy Holly, but nah, Buddy's an awesome guy, but he didn't write and launch the song. Okay, James asked, do assets in retirement accounts, not only IRAs and 401ks, profit sharing, defined benefits, need to be reviewed? Well, if the retirement accounts are paying out to pass-through entities, then if it's reported on really the K1, then there's going to be, if it's international retirement account, then yeah, there are some rules that say that IRS also wants you to disclose those on the K2, K3. How exciting. By the way, if you want to Google IRS LB&I, which is Large Business International, LBI, what's called Practice Unit, it's their audit guide. LB&I, like Large Business and International IRS Practice Unit. On the foreign tax credit, you'll find that IRS has charts on what's reportable and what's not. But definitely included in that chart, James, is foreign retirement plan payouts that pass through the pass-through entity. Okay, Hemant has asked this question. If you have minimal foreign tax credit from a brokerage account, does that trigger a K2, K3 requirement? And the answer is yes, if the pass-through entity has paid a foreign tax, even if it's $1, it triggers the K2, K3 requirement. Okay, I have some rather explicative commentary from a very colorfully pronounced participant that I shall not repeat about K2s and K3s. Here's James again. Has the IRS exceeded its authority in requiring the K2 and K3? Golly, probably not, because they used to ask for this stuff on white paper. and now it's just on a form. But they might have, in the sense that they're asking for things to support the foreign tax credit computation. I mean, it's been promulgated without the Administrative Procedures Act. It's just that you'd have to file a court case against them, and that would take 7 years and tens of thousands of dollars. And so if you want to test them, go ahead. Somebody says Ronnie Hawkins, Dale's cousin. The Dale Hawkins, who wrote the original Suzy Q, died a few weeks ago. And Black Mold, a DJ on New Orleans WWOZ radio, plays an original song and version covered by the Rocker weekly on the Friday evening show. So thanks for that, Lewis. Here's a question by Julia. Do we need additional poll questions? No, I think you only got 1 hour of credit. And we got some thank yous here. Thank you all for thanking us. And then somebody said, Lewis says, what's the case you mentioned about amendment return not being required? It's Badaraco, B-U-S, B-A-D-A-R, Badaraco. What is it? How's it spelled? Just a second. What I'm going to do is go back and search it for you so I can spell it. But it's U.S. Supreme Court, Badaraco. It's in the slide deck that's been provided to you. B-A-D-A-R-A-C-C-O, Badaraco v. Commissioner. It's U.S. Supreme Court. Here's the citation. It's in your materials already. 464 U.S. 386. It's a 1984 case. Badaraco v. Commissioner. 464 U.S. 386. 1984. Okay, got it. Is a green card holder a foreign partner? This is from Sandra. The answer is yes. They are a U.S. resident alien, and that's true. But they're also a foreign partner because they're a foreign citizen, which means their income could be taxed by both the foreign country and the United States. Therefore, they're foreign, and therefore the foreign tax credit could bail you out from paying tax twice. So they're treated as foreign under these rules. Thank you, Sandra, for the question. Hemant asked this. I heard IRS was not geared up to receive the S-Corp K-2, K-3 earlier. Has it been cleared up now? It's not until late June, and right now we're mid-June. It's, I think, after June 26th or something, as I recall. But that is if they're really ready when that date comes. So they could accept it PDF, the K2, K3 PDF, but not electronic filed, which means if you wanted to file it electronically with your return not in PDF form, you had to extend and do it after the June date if they really come through on the June date. Okay, the Streamline Compliance FBAR link does not work. Okay, so Molly, here's the deal on that. It works for me on Google Chrome or Google Incognito. And I recently put those in and those links do work. So what I would do, if it doesn't work, try a different browser. And if that doesn't work, then take the keywords from the link and type them in and you should be able to find the link. Okay. Steve writes me, and by the way, class, if you're wondering, I've got probably 5 more questions here. Okay. Steve writes this question. I have received Form 1065 K1 with wrong allocation numbers, and also the K1 failed to ask the relevant questions regarding foreign activity. I believe in 8275 and a Form 8082 Notice of Inconsistent Position are appropriate. Please discuss. Yeah. I mean, I think you need the 8082 no matter what. And Steve, I'm a big fan of filing the 8275 when there's anything messy on the tax return factually and or legally. And so, yeah, I mean, I love filing 8275s because it takes the penalty off the table. So I routinely file them, sometimes with the 8082 attached. I couldn't agree more. If you have the gut feeling you should disclose as a messy, factual, or legal position, and here it's going to be a factual position, then definitely I think that's a good plan. Okay, here's Abigail. I guess you can keep submitting questions, class, if you want to. Here's Abigail. If a partner or shareholder files for the 1116, must the K2, K3 be filed? Yes, if the partner asks you for it. So Abigail, here's the deal. We all know in 2022 that we all have to file K2, K3 no matter what. But for 2021, you might get transition relief. But the deal is, just a second.
I'm sorry.
15 minutes, thanks.
Okay.
Hey guys, I'm in a Hampton Inn. I got a late checkout legally, okay? And the maid just came in to clean the room. So there, and it happened live. Isn't that exciting? Okay. So I'm back. If a partner or shareholder files for 1116, must the K2, K3 be filed? If the partner has asked for the information, then yes, you must file the K2, K3 every time. But if they haven't let you know that they need the information for the 1116, you may be off the hook for supplying the information on K2, K3 if you follow the ground rules from FAQ 1515, which I call Fix B. So it depends. Very nice. Okay. Some nice comments from some very nice people here. Must take K3 be filed if a U.S. partner has an 1116 filing requirement due to mutual fund dividends? Well, it'll help the U.S. partner to have the information that would be supplied on a K2, K3. So if the partnership or S Corp has followed escape hatch I call Fix B, and no one has let the pass-through entity know that a K2, K3 is required, the partnership may be off the hook for filing the K2, K3, but then the partner in question here, Lewis, in your question, can come back and bug the partnership, which is not what they want, to be bugged for things like that. So it's better that they push out the K2, K3 originally and be done with it and move on with their lives. Better for them, more efficient. But the question is, if the partnership met all the requirements of Fix B, which is IRS FAQ 15, then they don't have to file it, but they will have to come up with the information later. Now here, music trivia buff Tomer says the band also played for Ronnie Hawkins before Bob Dylan and then becoming the band. Really? Oh, that's fantastic. And then we've got one more. It says, if you have not collected a W-9 in past years, is it sufficient to get it going forward? Well, it's the best you can do. So is it sufficient for the past? Probably not. But what if you have them sign a statement at the same time? Now, don't backdate the statement, but what if you have them sign a statement at the same time that says all of our partners have always been U.S. partners. I've always been a U.S. partner, and this is retroactive way back to the beginning, that it's effective that I've always been a U.S. partner. In other words, you could try something like that. You don't backdate it, but you say, effectively speaking, I've always been a U.S. partner. And if you make that, you can take the W-9 language and put that into the statement they're signing, all the key language that operably protects you. I would do that if you're worried about it, but don't backdate it because that's lying about stuff. And Alan would tell you in his relationship seminar that that's a bad thing to do. Okay, I think that's the last question. Oh, what a kick this has been. So, on behalf of Alan Gassman and his outstanding law firm, and CPA Academy for that matter, I'm Bradley Burnett signing off. If anybody has a last question, pipe it in. I'll give you a second or so. Okay. So glad you joined us, and I hope you received value, and I hope you enjoyed it. I'm Bradley Burnett signing off.